Hello and welcome to NDTV Profit. You're watching IPO and the company in focus for us is Indogulf Crop Sciences. The company is coming out with an IPO which opens on June 26, closes on June 30th, price between 105 to 111 rupees per share. It's a fresh issue of 160 crores and OFS of 40 crores. So a total of 200 crores, and the company is valued at little over 700 crores at the upper end of the price band. And joining me today is Sanjay Agarwal, who is the managing director of the company, and Mr. Manoj Gupta, who is the chief financial officer of the company. Gentlemen, thank you for joining us on NDTV Profit. To begin with, Mr. Agarwal, give us a sense of the kind of work that you do, the manufacturing you do in the crop sciences business, because what we understand is that you manufacture products for crop protection, plant nutrition and biologicals which are used in the agrochemical industry.
Yeah, good morning, friends. So Indogulf is basically into manufacturing and export of agrochemicals. And agrochemicals has two broad segments. One is crop protection and one is crop product. So we are into both the segments. Crop protection, we have herbicide, fungicide, insecticides, plant growth regulators. And in crop productivity side, we have biologicals and nutrients. So we have an integrated basket of product, and in our technical basket, we also manufacture technicals as a part of our crop protection business. So we have around 70 registrations with us, out of which we produce some 10, 12 technicals. We also import some technicals. So our basket is a very comprehensive basket, serving to B2B, B2C, and overseas customers.
Mr. Gupta, you're raising around 160 crores in fresh equity. What is it going to be used for?
Out of this 160 crores, 65 crores we have used for working capital. 14 crores is for my new plant, DF plant is coming, and 34 crores loans repayment we are doing. 12 crores is basically for the issue expenses, and balance is the general corporate purpose.
Mr. Agarwal, you spoke about the fact that you do B2B and B2C business as well. What is the kind of outlook that you have for this sector? Because you've been growing on a top line of really 6.4% on a CAGR basis, which is compounded annual growth rate basis for revenues, and profits are growing at 3.5% on a compounded annual growth rate. So what is the kind of outlook of growth that you have here?
See, all these three verticals have different opportunities. So our main focus is on our brand business, and especially for the India market. And in our crop protection, there is a segment of biologicals and nutrient, which is one of our legacy business. And when we started this company, one product which is a micronutrient deficiency corrector, that was our initial products. So we grew over 3 decades, and biologicals and the nutrients will be the major focus area, because these are the upcoming market and emerging products. We are more focused on brands. Also, we have overseas business, and in overseas business, we have been working in 34 countries. Many registrations are still in pipeline. Our business is a regulated business, and it requires some times to get the registrations, and we are doing well. However, overseas is not our major part of the business. Brand business is the major part of the business. We also do B2B, which is basically technical business, and this adds value to the barter purchase and the supply chain management also. Our commitments and our deliveries are the base for this B2B business, and we are doing well. However, for our future growth, we plan to expand our brand business more aggressively. Very recently, we have added one wholly subsidiary company by the name of Abhiprakash Globus Private Limited, which is a wholly subsidiary of Indogulf Crop Science. The objective is to increase the reach and increase our brand business, our B2C business.
Since you said it is a regulated business, can you give us an idea? Do you depend on subsidies, reimbursements coming from the government?
No, we are not into like bulk fertilizers or any such kind of subsidies. So it is a private channel, and we have over 6,000 distributors. We have around 200 channel partners for B2B business, and more than 130 business partners overseas.
Mr. Gupta, can you comment on the margin picture here? Because you had a margin of 10.7% EBITDA margin in FY24, but for the 9-month business, it is 9.36%. Is there a reason why margins have contracted for the 9-month period?
Numbers are actually for 9 months. Basically, when we go in the 12 months numbers, it will be much better. But yes, if you will compare with as comparison to last year, we have done the equal margins. So last year with the 9 months number, it was 9.5% and it is again 9.3%. So there is not a much, but yes, we have the growth in the PAT margins, which was in last 9 month numbers, this was 4.1%, but this year it is 4.6%.